What's up everyone, Tom here with another video. Well, I'm sure everybody that's looking at the markets right now around the world is thinking, wow, we have just had some big moves. In this video, we'll be talking about the big moves, why it's happened, and also our technical analysis of the S&P 500, Nasdaq, Dow Jones, gold, and dollar index for the week ahead into the US election and after. There's a lot to talk about as we are possibly seeing a bit of a crash happening now on the stock markets around the world. Where to next? Let's talk about it right now together. Stay tuned. Well, I'm sure all of us are thinking, wow, this is a really big sea of red on the markets right now. Should we be concerned or fearful of the markets ahead of the election? We'll be talking about that, but firstly, let's just quickly talk about yesterday and the last 24 hours. So nothing was safe really yesterday in the markets. Almost every stock was down. In fact, I think it was about 97% of the S&P 500 posted a loss for the day. When we look around the broader markets, we can see here that there was a little bit of buying by the retail community in the morning, that's us, and that's been happening recently where the market's really trapping us into this idea of buying in the mornings, selling off through the day, which we've seen on our live streams quite a few times over this crisis period, and then more importantly, selling into the close. Look at the aggressive sell down into the close. We know that this is big investors and Wall Street themselves selling into this close. We had a 3.43% down day on the Dow. We'll be taking a look at that a little bit later. 3.53% down the S&P and 3.93% down on the Nasdaq. So some pretty large moves across the board. The leaders of the sectors were the big two that we've been looking at recently. Energy's down due to shutdowns around the world. Obviously, Europe is re-shutting down in Germany, France, and other areas. UK potentially prepping. And I think this is just a huge demand problem for energy. But that doesn't mean there won't be value on the horizon. A lot of people are starting to get very negative on energy, and at some point it will become a value play. Other than that, technology is down huge, 4.24%. And that's what happens to growth sectors during a decline. They always move harder and faster than any other sector. But what I really want to talk about today in today's video is what's going to happen into this election. What is the stock market telling us about the election? And more importantly, the next couple of months after the election. How can we predict where the stock market's going to go? One of the ways we can do that is we can look at the previous performance over history. And we can see here the last month for the stock markets in the US are now a net negative into the election. And this becomes important when we look at the stat that we talked about earlier this week. This is a stat taken from 1936 to 2017. It talks about the incumbent party winning and the incumbent party losing based on S&P 500 performance. And remember, the stock market's probably one of the better predictors of what's going to happen. So 1 month out prior, I want to talk about this fact and figure. It looks like the market maybe at some point was predicting a Trump win. Now potentially due to the decline, and we're now seeing negative reactions across the stock market into the US election, we could be seeing a Biden win. Now, I'm not here to get political. This is just a pure stats and figures play on what the markets are telling us. So generally a negative month into the US election has been the incumbent party has lost, and that has led to, of course, a change in government. Now, this change in government changes a whole bunch of things about investments, and that's why I think a big amount of people are starting to sell out of the market. Are they right or wrong? We'll see very, very soon. But this seems to be the thing that most people are doing in the markets this week. They're taking profit off the table and they're going to recycle in. And I think this comes down to the next stats that we're going to talk about after the election. Usually, a month after the election, we're seeing weakness in the market, regardless of which party wins. Then we're having a bit of a Christmas rally, especially if the incumbent party lost. And after that, really, both markets are going to be positive. So the reason why it's less positive if the incumbent party loses, of course, things like changes in policy and things that just make common sense. But very, very interesting to see that the stock markets have now moved to a net negative into the election themselves. Let's talk about earnings. We have Super Thursday. We have Apple, Amazon, Facebook, Activision Blizzard, Moderna, Spotify before open. So many things coming in. eBay just had an announcement. A whole bunch of others have come out this week. And nothing seems to be safe from even decent earnings. We've had decent earnings, earnings beats, earnings pretty much neutral, and overall it doesn't matter. the market doesn't care what we think. The market doesn't care about anything right now. It's trying to do its thing where it's trapping us, the retail traders, it's trapping the normal investors, and it's creating a fear in the market. And of course, that crash flow on effect. So where does it go from now? Well, of course, 97% of companies were down yesterday. But I think also the other rhetoric is not just that stimulus is needed in the stock market right now, but stimulus is needed in the general economy. And because of the war between the two parties, we have not seen stimulus yet, which we should have already seen. The market wants this, and the market already knows that the Federal Reserve has run out of ways of protecting the American markets right now. They've said, yes, okay, we've got to put in here. We've got the Fed put somewhere. Wherever that price is, we're not sure. But the Fed has run out of generalized tools at this stage to really fix the market. And when we take a look at the VIX and the fear that's in the market right now, it's real. I mean, VIX spiked yesterday, guys, to 40.3. Now, all of us were looking at this number and we were thinking it could happen. We were thinking certainly 35 to 38 was on the cards before the election. But we're days out now from the election and we've already hit a 40 handle. To put that in perspective, we've gone well past our expectation of the channel, which was 5 points. And when we zoom out and we go to maybe a weekly chart here, we're getting up there with the June level VIX point. So we're getting up there with fear from June. And what if we were to reach some more fear? Volatility index means, of course, fear. It means that markets are selling off. And often this is a good opportunity for us to start picking levels where we want to make longer term investments. Remember, the stock market generally does go up over time. So VIX is telling us heaps of fear in the market. Now that we've gone past the previous high, maybe we go as high as 44.3. And then after that, well, there's anything can happen really. Put call ratios are showing us there has been a decent amount of puts being put on in the last 24 hours. We saw put call ratios wildly switch this week. This was a pure trap from Wall Street where people were buying calls in anticipation after the Microsoft kind of event or before that, into Microsoft, into Apple, into the FANG stocks. And this is us, the retail herd. I'm almost sure that the retail investors were buying calls in anticipation of buying the rumor, selling the fact, or making money into the event. That didn't happen, and put call ratios are now at a high point. And I think that means that if the market does come down to the technical analysis level we're looking at today, that potentially it does bounce off that zone a little bit. Copper overall still showing us that the recovery is in place across the world. This is probably also due to China demand in copper. And I think that copper's been a good indicator. It still is a good indicator. We're not seeing a crash on this yet. So overall, this could still be just a correction into the election, a little bit of weakness, and then on with the bull run after that, after we see further stimulus in the US. Dollar index, same kind of thing. A couple of things to note here. 2050 cross up on the moving averages. So this means that we have a bullish looking 4-hour chart here for the dollar index. We talked about this 93 zone acting as support yesterday. It was beautiful on the smaller time frames. You can see here 2 little rejection wicks, then a bounce up, hit the 93.50, which is what we thought, found some resistance, and now it's starting to coil and probably doing a little bit of a rest before possibly moving as high as the 93.85, which has been previous resistance now for quite some time. So dollar index, that's our thought process right now, but it's putting pressure on things like gold as well, where gold is not acting as the hedge that you think it would because dollar index has been strengthening so much. So let's talk about the markets, guys, what we're all here to talk about. First up, Dow Jones. We don't often bring up the Dow Jones, but this is basically a double top now, and we're right on the support line. We are right on this level here, and this is the point where if the Dow Jones breaks through this zone, this 26,630 area, or 26,600 flat really, it could move quite substantially down. I mean, what's a double top telling us? Well, a double top is telling us that we should go the distance of the move, and that move should then be extrapolated out and becomes the next level. If that was to occur, we would go back into market structure that was formed over here through April into June, and that would be around this 24,200 to 24,000 level, a pretty significant move by anyone's means on the Dow. Another thing that I noticed is that we have some MACD divergence here. Of course, we've got MACD divergence between the two peaks, and this also is pointing to weakness in the market. 2050 cross here as well on the daily just about to occur. And this is usually what happens around double tops. Whether you're on a 5-minute chart, a 15-minute chart, a 1-hour chart, doesn't really matter. You're always going to see around a 2050 cross to the up or down of whatever that particular pattern's telling you, right around the level of support or resistance. And often one will precursor the other. When price action precursors the other, it's even better for you, because when the two moving averages cross, algorithms often get involved in the trade as well. So if you're seeing it from a price action perspective before the cross itself, you get in, then it crosses, price action is even better because it gave you that precursor warning and you get in before a lot of the algorithms do. To just note though, we have not seen a 2050 cross on the Dow for quite some time. So you can see how significant this level is going to be moving forward. Onto the SPX, the S&P 500 in this case, another thing that's just occurred, 2050 cross. This is the real market. So we have seen this on the 4-hour SPX, the first cross for a little while now here. And we haven't seen quite a daily cross. Let's go over the daily and just quickly talk about that. So no 2050 cross yet on the daily. Not as kind of clean, I guess, double top as the Dow. There was a little bit of a spike up here, but we do have close to the previous peak, and we clearly have a level of support. This was the 3200 zone. So the 3200 to 3230 zone was previous resistance over here on the left-hand side. It's now previous support. It's probably going to act as previous support now. And then if it gets through that zone, where do we go? I'm thinking 3,000. We thought last time 3,000 was definitely a level that the market could get to. It got to our first level being the 3,200, pretty much bounced straight off that and had a very nice bull run. But depending on what happens in the US election, we could certainly see it come down here, go through, come back and test from the bottom up, and then continue on down. And that makes some levels of sense when we look at the bigger markets. When we have a look at the SPX on the weekly, we were talking about 3310 yesterday, the 20 moving average. It just blasted through that zone. It's not over yet for the week, so it could certainly bounce back up. Remember, these are weeklies, so it's expected that it goes through a little bit and then bounces up. But this point here was pretty key. Now we're going to come down and test that 3235. And if it keeps going down, well, we might even be going for a larger time frame moving average. And that could be something around this 20 moving average on the monthly. We haven't touched that for quite some time. We don't usually touch it. If you look at big runs, it takes a long time before a touch happens. But when you get big corrective phases in the market, notice it quite easily usually touches the 20 monthly. So here's 2015. It very easily came down and touched the 20 and eventually kind of caught up with it. Over here, again, before this 2020 crisis, we saw the 2018 period and it came down, touched it, went through and even hit the 50. So the 50's been the point that the market's been looking at again. If you're really doomsdaying the market right now, the 50 could be the place that we see it go, guys. It could be the area that happens next. For now, though, I'm thinking 3,200 and then 3,000 if it gets through the 3,200. I don't think there's that much saving it in between those zones. So Nasdaq did the things that we've been talking about as well. Here's the NDX, the real market. We've been talking about the 200-point increments. It cleared under 11.4 last night, straight into the 11.2. You'll notice here on the 1 hour, there was some buying pressure that came in around that 11.2, and then it closed underneath to get 11,142.8 close. Where to next for the Nasdaq? Well, if we continue to see selling pressure today, and I do think we'll have a little bit of a spike through the European and Asian sessions, as in the futures will go up over that period, back down to the 11,000 and then back down to the 10,800. Each one of these 200 points has still been the beautiful place for us to trade in terms of technical analysis. And if you're looking at scalping and day trading ahead of the election, 200-point increments have been the best way on the Nasdaq. It's very, very similar to any of the other indices overall. Again, this 10,800 level in this case will be the very critical zone. And if it gets through there, I've talked about it a few times, I'm thinking 10,000 is certainly on the cards to go back and touch the daily 200 simple moving average. And this will really line up pretty well with things like the S&P 500 hitting 3,000. Remember, most of these indices should hit support at the same points. The Dow, the S&P, the Russell, 2000, and of course the Nasdaq should all hit supports at a very similar point. This time, it's all about the 10.8. After the election, we get through that, expect big selling down to the 10,000, and then that could be a very good investing zone, a very good area for picking up long term. So what's happening on gold, guys? Well, gold's going crazy. Gold has moved down, and this is in a big comparison compared to Bitcoin. We mentioned this level yesterday. We mentioned the 1896 acting as a level that if it got through, it would probably gravitate to the next zone. You'll notice it did that over here on the left-hand side. Previous support, a little bit of support now. A further breakdown in gold today will pretty much trigger into an 1850, and this is just due to the way that the dollar index is moving. People are moving into US dollars as a hedge and other hedge currencies, and some people are even moving into Bitcoin. We saw Bitcoin hit the magical level yesterday and then sell straight off it. Take a look at this. This just shows you FOMO in effect, and then the same level, about $2-3 underneath the previous 2019 highs, we saw big sell-off event. I mean, that was fairly substantial. In only a few hours in the webinar I was doing last night, I was saying, I think this thing's going to go down from this level. It's just reached it, and it sold all the way back down to $13,300. So fairly substantial moves there on Bitcoin. I still think there's a bit more selling to go, potentially down to the 20 moving average here on the daily, and to go and test the previous resistance, so around that 12,500 psychological level. Well, I hope everybody's enjoyed this video today. If you have, please give us a thumbs up. Of course, subscribe and hit that alert box. And we'll be doing live streams next week. Just a reminder, Monday, live stream opening bell. Then we've got the US election special that we'll be doing for a 6, maybe even 10-hour stream, depending on how many of you come out and watch us, talking about the financials and everything that's going on with the race. It's going to be a very exciting financial day. There's a lot of excitement that goes on in the futures trading markets. So definitely join us then, and we'll see you there. Good luck, everybody. Stay healthy, make as much money as humanly possible, of course, and we'll see you in the next video. Bye for now.